So for an investor at the moment, there's a huge dilemma, Mohamed, which I'm sure you appreciate. On the one side, we've got this terrible data, initial jobless claims, the PMIs, the earnings, everything. And on the other side, we've got this huge stimulus effort and a government and a Federal Reserve, a central bank that essentially say, we're ready, we'll be there to catch you if you fall. What's the approach with those two opposing forces in this market?
Look, John, that depends on every investor's own approach. My own is I don't feel comfortable betting on moral hazard. I don't feel comfortable betting on bailouts, and I certainly don't feel comfortable on this notion that the Fed is going to come in and buy stocks, regardless of the risk it takes. And if it does, by the way, then we will no longer be talking about just zombie companies, which eat away at productivity and dynamism. We're going to be talking about a zombie market that can no longer allocate capital efficiently. So I think we've got to be careful. I understand why people are attracted by the moral hazard trade. It has worked so well over the years, but that's not something that I am comfortable with.
Mohamed, I wanted to end this conversation by thinking regionally as well. Over the last month or so, really global risk has just traded as one big global macro story. Quite clearly, there are regions and countries that will be able to respond to this a whole lot better than others. The United States versus Europe, the US versus emerging markets. How are you thinking about that dynamic at the moment?
And that's a great question, John. And I continue to feel that the relative trades are easier than the absolute positioning. What do I mean by that? Exactly what you said. The ability to navigate this bumpy journey, which is resilience, and then the ability to take advantage of the post-crisis landscape, agility, these two factors are really important. And when you go around the world, countries and companies differ. That's why I've continued to say, do not fade the U.S. relative to Europe and emerging markets. The U.S. will continue to outperform in relative terms. Do not fade the dollar. The dollar will remain a strong currency, both during the journey and the destination. And be very careful about sovereign and corporate defaults. They will happen. And I think if you look to emerging markets, for example, there's too little recognition as of now that we have a wave of defaults coming, and that is going to impact the economy. And unlike the U.S., these will not be bailed out.